I think the biggest issue here is, and the reason why it was such a big impact is because it's the first sign that Japan is actually willing to budge on this policy of theirs, where they've been at basically zero interest rates for so long. So I think it's not the 25 basis points that's really the shock. It's that they actually moved at all, which seems crazy, but they've been in this kind of policy of no interest rates at all for such a long time. And now it looks like it's starting to change. Yeah, the only, and you're right about that. The only thing I can think about is that, does this signal some bigger trend of a slower macro economy, right? So if Japan is moving because they're seeing certain things, not only inflationary, that are causing them to make this move, does it speak to a larger trend of large economies beginning to weaken? And does that eventually mean that the US dollar will fall because stimulus may have to come back at somewhere in the future? I mean, is that the end goal? And how many years out? Who knows? But you're right. It is interesting to see the dollar fall. I think it is. I think the biggest kind of switch that I saw is this, if you go back on monetary policy, whether it was the Federal Reserve or Bank of Japan or Bank of England, I mean, there was this kind of pressure cooker where they always wanted to keep asset markets up because they felt that wealth effect was working. And then what we saw is over the last 10 years, the rich got richer and the poor didn't really benefit as much. If you didn't have investments, you didn't make much money. Wages were stagnant, all that. Now, all of a sudden, what we've seen is this kind of rotation of thought process where they're saying, okay, we have to start paying attention to inflation because that's what the poor and middle income people are really being affected by. I mean, they're getting poorer because prices are going up. They can't afford that. So you have to kind of look at it like, okay, so forget about the people that have money already. How do we start dealing with the poor in the world? I do think it's going to be a tough battle to fight. And I think we have to look at how the trend has been, right? So we've been under trend of inflation for many years, which then usually means to get back to the medium or the mean, we have to have a multiple period of years above that goal of 2%. And I think that's what we're going to see. But having said that, that would generally indicate the Fed would be unlikely to stimulate. I would argue that in the beginning, for the next few years, the Fed will be really hesitant to print any money or lower interest rates because inflation is going to be sticky north of 2%, whether it's 3, whether it's 4, I'm not sure, but they're going to be not wanting to trigger the inflation bug again. However, let's say 5 years out, we find ourselves in this protracted, this long recession that's borderline depression. There will be a point where it gets so bad, they will have to go back to what they do best, which is printing money to stimulate growth. I do think they've gone a little far. And again, part of it, I think, is human psychology. The Fed, when it comes down to it, everyone looks at the Fed and says, oh, they're almost superhuman. They're these great, bankers and everything. But in reality, they're humans and they have emotion. And I think they got way off sides on the transitory call. They feel like they have egg on their face from that call. And I think they kind of overreacted and said, oh my goodness, we were wrong. Now we have to prove that we're tough on inflation. And they've gone a little too hard, too fast in the opposite direction. So my guess is that we haven't seen the recession yet hit, but it is going to come in a big wave and it's going to be nasty. It's going to be one of the worst recessions that we've seen probably since 2008, 2009. And it's likely going to last a lot longer, mainly because the Fed won't be able to stimulate us out of it in the early portion. So, I mean, really, I've gone on record and said, I don't think the S&P will make new highs for 10 to 15 years. I still think that's very logical. If you look back at the dot-com bubble, it took the NASDAQ 15 years to make new highs. And here we are seeing the amount of liquidity that was in the markets, the bubbles in crypto, in stocks like AMC and GameStop. It's very similar. And without the Fed stimulus, we could be looking at 10 to 15 years before new highs are hit. Yeah, so I do think, honestly, I'm in a camp where I think the dollar has probably made a longer term high pivot. In fact, let's take a look at the charts here and kind of get a gauge on that. So what we do is if we look at this chart on the US dollar, the DXY, we can clearly see that you were trending up. And interestingly enough, if you can connect these highs and look at that, I mean, basically the high was right into that level. And I love trend line analysis because what you can get from trend lines is that every time it hits, you get some sort of pullback. And in this case, it's been a much bigger pullback. Oftentimes when you get this kind of triple-headed monster right here, that's the sign of a bigger top forming versus what we had over here, which was just an up move, pullback, and then new highs, obviously. So to me, I look at it and I say, the Fed is now stepping down on their rate hikes. We just had a 50. It's likely we'll get a 25. as the economy weakens, we're going to get less and less hikes and probably even just more of a neutral policy, meaning no more hikes. And I think that really makes the dollar a tough sell for, or a tough situation to make new highs in the near term. So I'm in the camp anyways that I do think we likely will see the markets, or at least the dollar, having topped out here. And that's going to be very good for metals like gold and silver. I think it'll be phenomenal, in fact, for gold and silver. Take a look at the US dollar yen, and because I think that's an amazing chart here. And the first thing that strikes me is this is the big move on the back of what the Japanese central bank did. I mean, that is a huge down candle. One of the things that strikes me, though, look at this. Take a trend line right here, draw it across. Notice how it hits this low, and then we draw it straight across, and look at what you're into. So believe it or not, it's very possible that we get a short-term bounce on the dollar yen, but I am in agreement that I think that this change in policy for Japan is a policy that, again, if you follow it out months and years, is probably one where the yen starts to strengthen versus the dollar. And that's where you get this dollar yen chart to continue down in the longer term. It certainly looks like it's giving it a little bit of short-term strength. I mean, it's not a big move up today, but what we can see is that the euro has really had a very significant rally ever since we got down to that parity or just below parity between the dollar and the euro. It's been really all gangbusters to the upside. Now, I do think, again, the euro is getting towards resistance, right? We look at some trend lines in this area here. If I throw that one in there, and again, it's not wanting, there we go. So again, you might have a little bit more upside on that. And then, by the way, this is the FXE chart, which is the ETF that tracks the euro. But I think you have a little bit more upside. And then I do think, again, same thing. If the let's say in the short term, if the yen pulls back against the dollar, then you could be looking at just a little bit more, upside in the euro, if you will. So I think, again, likely to see the dollar weaken continuing over the next 6 to 12 months. And I think the yen and the euro could easily strengthen. And I'm kind of in that camp. And I think there will be areas of the world that don't get hit as badly. I think some of the emerging markets, whether it's China or South America, they could hold up a little bit better. Their economies, you could argue, by looking at their charts of their main indices, they've actually been consolidating now for 14 years. You haven't had new all-time highs. I mean, speaking of what I just said about the US markets maybe not making highs for 10 to 15 years, those markets haven't made new all-time highs in 14 years. And so I think there's certain pockets where money will rotate out of the US, but I think the US is now on a downturn that will last a very long time. It will likely spread to the European Union, the UK, and maybe even Japan to some extent, although depending on their policies, maybe not. But ultimately, I do think that it's going to be something that is mostly global between the big powers.